Welcome to S&P's European loan market video overview, detailing leveraged finance trends and activity during August 2011. I'm Suchit Gupte, a member of S&P's Leveraged Commentary and Data Team, a unit of S&P that is not affiliated with S&P Ratings. For the next few minutes, I'll walk you through a review of recent loan and high-yield bond market trends in Europe, before winding up with themes to watch for in September and early October 2011. Before we start, please know you can follow LCD on Twitter, Facebook, and can join the more than 6,300 contacts in LCD's Leveraged Loan Group on LinkedIn. The links to follow LCD are in the info section on our YouTube channel. You can also download the slides for this video at slideshare.net. After a tumultuous July, the market took a much-needed break in August. Though it wasn't all fun and games, syndicators and bankers were working on deals behind the scenes to make them more palatable to investors, while investors were reevaluating their portfolios, offloading certain names, and a few brave ones were even looking for new opportunities. There seems to be no end to the fallout from the sovereign risk contagion and a seemingly unending drip of weak economic news on both sides of the Atlantic. This has directly impacted new issuance. European high-yield new issuance for August was not, the first time since February 2009. Leveraged loan issuance in August was no better at 63 million euros, the lowest read since March 2009. In the secondary market, loans finished the month at 94, while high-yield bonds closed the month at 92.57. The S&P European Leveraged Loan Index, the LE, had a negative return of 0.84% ex-currency for the month of August. On a piece of good news, at least default rates fell in August, as there were no new defaults. Focusing on the secondary loan market, this chart details the average price of LCD's European loan flow name composite, a measure of the 14 largest, most liquid loans consisting of 10 issuers since 2002. The flow names fell 341 bips to close the month at 94, the lowest read since July 2010. This next chart details the average price of LCD's European high-yield flow name composite, a measure of the 12 most liquid high-yield issues since the beginning of the year 2010. The high-yield market fell 860 bips during the month, but managed to claw back 200 bips to close the month at 92.57. This next chart details the monthly return of the LE, a broad measure of European loan market returns that LCD calculates. The European loan market posted a negative return of 0.84% for August, down from the negative 0.6% seen in July 2011. For the year-to-date through August 31st, the LE has returned 0.41% positive, quite significantly behind the 3.93% recorded for the same period last year. Now we turn from the secondary to the primary. This graph details new issue volume for both leveraged loans and high-yield bonds. New issuance for leveraged loans during the month of August stood at 63 million, down significantly from the 5.4 billion euros seen in July 2011, and is the lowest read since March 2009. High-yield issuance in August 2011 was not, down from the 3.1 billion seen in July 2011, and is the lowest read since February 2009. On a positive, default rates went back down in August after rising in July. The default rate by principal amount now stands at 3.77% at the end of August, down from the 4.48% seen at the end of July 2011. The default rate by issuer count now stands at 2.62%, compared to 3.18% at the end of July 2011. In summary, the fallout from the sovereign risk contagion shows no sign of abating, as confidence weakens in the broader capital markets, and there's still a lot of uncertainty regarding the impact of regulation and government intervention. Loan returns, however, are still better than those of high-yield bonds and equities. Investors and arrangers are still not seeing eye to eye on the changes that may be required for a deal to be successfully syndicated. Banks are being hampered by the flex language in their underwriting agreements and might be eventually forced to offer incentives that eat into their underwriting fees. That brings us to the end of our overview. I hope you found it informative. We'll update the analysis each month and plan to have analysis of other specific European market segments going forward. Check out LCD's YouTube page for other video analysis of the leveraged finance market, including U.S. loan market wrap-ups. The link to the page is in the description for this video. For more information on LCD news or research in Europe, you can contact Anna Cini. You can email her by clicking on the link in the info box. Thanks very much. We'll see you soon.